Welcome to the part B of Gauteng question 3 June exam 2023. Right, the part B here we are looking at 3.2.2, which says we should calculate the average stock holding period for Elite. Average stock holding period for Elite. In calculating the average stock holding period, we are going to need the opening stock plus closing stock divided by 2. We look for the average stock and then we divide the average stock by our cost of sales multiply by the number of days. So average holding period for Elite. We say average stock over costs of sales times 365 days. Now, you can either use your units or you can use your value. Whichever way you decide to do it, you will still get your marks. Your answer, your days might not be the same, but you will still get your mark. For example, I will first want to use the unit. In using the unit, opening stock is 18 plus closing stock 22. I divide these two by 2. Then I divide now by the number of units sold times 365. And when I do that, that should give you 40,8 days. 40,8 days. And then if you decide to use the value, then your opening stock will be 414,000 plus your closing stock, which is 529,000. You divide by 2 over your cost of sales for Elite, which is 4,122,950. Then you multiply all this by 365 days. And when you do that, that should give you 41,7 days. Whichever way you decide to go, you still get your answer. Now, the CEO is satisfied with the performance of basic range compared to the Elite range. Give 3 reasons to justify his satisfaction. Quote figures and calculation. Quote figures and calculation. They said the owner of the business is satisfied with the basic range compared to the Elite range. And then we are asked to support his satisfaction by quoting some figures. Now, if you look at the stock holding period, the stock holding period for Elite is a lot, but when you check the stock holding period for basic, it's improved. The stock holding period for basic has really improved. Now, where am I getting my information from? From information 5. Check your information 5. It says financial indicator for the year ended March. If you check the stock holding period for basic, it has improved from 25,3 days to 14,7 days. It means before it takes 25,3 days for us to sell our trading stock. But now our trading stock only lasts for 14,7 days in the business, and then we sell it out. That is a great improvement. And then if you also check also with basic, we do not have to return any stock back to our supplier. There was no stock returns, unlike Elite, whereby we have to return 7 stock back to our supplier. And then also if you check with basic has a lot of sales. We were able to sell up to 96.1% of our basic stock were sold. If you calculate the percentage of the number of stock that was sold with basic, you'll find out that it is higher than that of airline. So all these 3 points shows that yes, the owner should be more happy, I mean, with basic than what selling airline. So we move on to pillows. We move on to pillows 3.2.4. 3.2.4. Remember, with pillows, we are using weighted average method to calculate our pillows. The weighted average method. During the physical stock count, it was discovered that 55 pillows are missing. This must be written off. Calculate the value of pillows that must be written off. The value of pillows that must be written off. Remember, using with the pillows, we are using weighted average method. So for us to get the amount of pillows for 55 units, we need to first calculate the average price per unit. The average price per unit. And how do we get that? We look at the value of stock available for sales over the unit of stock available for sales. Now, if you study your table very well, if you study your table B very well, you find out that the value, the total value available for sales has been given to you as 632,135, and the unit available has been given as 1,565 units. So for us to get the value of our average price per unit, we are going to divide the two. So we're going to say 632,135 divided by 1,565 units. And when you divide these two, you are going to get 403.9. 403 rand 90 cents. So I can say 403 rand 90 cents multiplied by the missing unit. The missing unit. So when I multiply these two, I get the total value of 22,215.60 cents. 22,215.50 cents. And that is the value of the missing stock of 55 units. So lastly, I am going to look at 3.2. 3.2.5. 3.2.5. The owner is of the opinion that changing the method of valuing the stock from weighted average method to FIFO will be more beneficial to the business. Provide a reason to support this change. If SARS grants permission to change, quote figures. Quote figures. Now, what are you supposed to do here? You are just supposed to look at the advantages of FIFO over weighted average method. The advantages of FIFO over weighted average method. Now, if we must use FIFO, you find out that our closing stock will be higher. Our closing stock will be higher. We are going to be taking our closing stock for pillow. We are actually going to be taking the closing stock will be from the stock of March. And if you check the stock of March, it is 430. So our closing stock will be higher. And because our closing stock will be higher, our cost of sales will reduce. And once your cost of sales reduce, your gross profit will increase. So that is one benefit of FIFO over weighted average. Your closing stock will be high, and then your cost of sales will be low, and then that will lead to a high gross profit. Now, Another thing is that FIFO is a more realistic method than weighted average. FIFO is a more realistic method than weighted average. I hope I have been able to help. This is me for today. We have just considered the inventory part of paper 2 of Gauteng, June 2023. For more questions, if you have any other paper that you want us to look at in this channel, please post on the comment section and we will respond to you. Please subscribe in order for you to have notification of classes. Share for you to help other learners who are doing the subject in grade 12. Like for you to encourage the tutor, and comment for you to ask questions. That is me for now. Bye.